Again to my channel. So I have this particular series that starts with what is accounting, and then we are now on the accounting cycle, and we are now on step 3 of the accounting cycle. So the accounting cycle step 3 is just posting the journal entries to the ledger. Okay? So what are those entries? These are those journal entries. And if you have followed the series, then you will know where did this come from. Okay? But if you are new to my channel, you can be able to watch these two videos right here. So these are their thumbnails, so that you'll be able to see where did these two sets of journal entries come from. Okay? So this first one is the journal entries, original journal entries, let's call that one. And we have here the adjustments or the adjusting journal entries. Okay? So you can at least watch those two videos with these thumbnails. Or else, if you wanted to start from the very beginning of this series, then you can go to the playlist of my channel. So go to my channel and then subscribe if you want to. And then you can select the playlist from zero to accounting hero. So there is a starting video right there until this episode. Okay? So today I'm going to assume that you did that already. And for nice viewing experience, you can set this video into 1080p on the settings of your YouTube app. And of course, you can turn on the CC or the subtitles, or you can select also the speed of my talking, speed of the video generally, by selecting times 1.25, times 1.5, or times 1.75. Okay? So with that, I'm already going to assume that you have seen at least the two videos that I've said. Then let's go to step 3, posting the journal entries to the ledger. Okay? So the very first thing that you need to know is that there is what do we call an informal version of the ledger, known as the T account. Okay? So you just have to post these entries to T accounts like this one. Okay? So the more formal version that I'm talking about, I'm going to flash that afterwards in the screen. What does it look like? Okay? So for now, in order to give a taste of a semi-formal T account, let's use the T account or the ledger for cash as the semi-formal. You'll see that in a little while. Okay? But before we start, let me give you a specific set of journal entries that we're going to post. Okay? So on the step 3, posting the journal entries to the ledger, what I mean is, we're going to post these journal entries, these general journal entries, not the adjusting journal entries. Okay? Why? Because our destination is to get the unadjusted balances of each of the account. Okay? Unadjusted balances. Okay? So, these particular adjustments will be set aside for the next steps. Okay? So, we're gonna post only this. Okay? After all, the balances of the accounts are 3. The first one is the unadjusted balances. The number 2 type of balance is the adjusted balances, which will be used in the financial statements. And the last balance is the closing balances for each of the accounts. Okay? Now, I think you don't have any idea yet of what's this step all about and those balances, I assume, because as if we are zero base here. So, let's get started with the posting first so that you'll understand what are those balances that I'm talking about. So, again, step 3, our goal is to get the unadjusted balances. Okay? So, let's have transaction letter A. So we have cash 100,000 and baby G capital 100,000. Okay? So actually, in posting that, there should be a T account for each of the account that you have used. Okay? So, as much as possible, you have a T account for each of the accounts that you used here. Also, you need to get ready for those accounts that will be used on the adjustments, because there might be some accounts in the adjustments that are new, that are not used here. Okay? But basically, theoretically, if you wanted to be sure that you are going to consider all of the accounts, do not base on your entries, do not base on your adjustments. You have to base on the chart of accounts list. And each of the line item there, you need to make a T account. Okay? So, since we don't have any chart of accounts, again, theoretically, each T account should be for one account in the chart of accounts. Okay? But in this case, in this lecture, we're going to prepare only T accounts for these entries, the journal entries, and these adjusting journal entries. Okay? Okay, so let's have the cash. Cash is 100,000. So you have to put that in the debit, because cash debit, right? So the debit side is actually on the left side. That's the debit side. And then the credit is on the right side. Okay? So, how are we going to post? Just put that 100,000 right here. Okay? But since I have promised that we're gonna have a semi-formal posting for cash, it's like this. First, you have to put on the description, investment from the owner first, before we put on debit 100,000. That is already semi-formal. It's neither to the formal ledger. Okay? So actually, this investment from the owner description should be the description on your journal entries. Have you remembered? We have cash, credit, and we have credit baby G capital 100,000, and after that I said to you there should be an explanation of why is this the entry, right? You have to indent and put there a very short explanation like that one, investment from the owner. So you have to get that explanation actually, and then you have to put that here also. Okay, so that the viewers or the audience or the ones that are reading the books, they will know why is there a debit cash of 100,000. Okay? That's the semi-formal the account already. Neither to the ledger, the formal ledger. Okay? So, let me also emphasize, guys, that we are just going to use the plain T account for the rest of the accounts. Okay? Now, we have BBG Capital. You have to make another T account because BBG Capital is different from cash. Okay? So that's basically posting. So it's on the credit side, so you have to put that on the credit side. So that's basically the posting. Okay? Now, if you will imagine, if we're going to post this bit by bit, there will be multiple entries here in cash. There will be multiple entries also in other accounts. Sometimes the account is used only once, but supposing we're talking about cash, there will be multiple entries here. And there will be multiple credits for cash outflows also. So you can summarize that already. Okay? And if you can summarize that, you'll be able to compare which is greater, the debits group or the credits group. And you are going to deduct credits from the debits. Okay? And if that happens, if the debits are greater than the credits, then that is the cash balance. So that's what I am talking about, the balances. And we are here to get the unadjusted balances still. Okay? But moving forward, let's put everything. Okay? So we have regulatory expenses. I'm gonna put that here. Regulatory expenses. Just in a little side. It's because I wanted to emphasize the asset side and then we have the expenses. So you're gonna have a separate the account for regulatory expenses. Now, after which you put 2,300 as debit and then credit cash 2,300. But then again, I have to make an explanation here, which is payment for business permits. Something like that. Okay? So, that's our T account. Next, we have prepaid rent since we're already through with letter B. Okay? We have prepaid rent, 15,000. That is an asset, of course. You have to put it on the debit, 15,000. And then we have credit cash, 15,000. So again, we have to put right here 15,000. And then you have to make an explanation, payment of advanced rent. That's it for number letter C. Letter C. And but then again, it has an adjustment. We have to ignore that first because here on step 3, our focus is to get the unadjusted balances. So that's the balances before the adjusting journal entries. Okay? I will repeat that always. Okay? Now let's have letter D. Letter D, we have supplies. And the supplies is debit 20,000 and credit cash. Credit cash, but it's only 10,000. So the explanation for this one, you can put here down payment for purchase of supplies. So that's for cash. For letter D, credit cash. But in order to balance everything, since this is only 10,000 and this is 20,000, we have accounts payable. We have accounts payable. Okay. So, the accounts payable is on credit, 10,000. Okay. So, this is the informal version of the ledger. This is the semi-formal. This is near to the formal ledger. So, I will repeat that. It is because maybe you'll be confused as to why the cash account is very detailed compared to the other T accounts. Okay? Now, let's go to letter E. Letter E is office equipment. You just have to post that here, office equipment. And then, that's 30,000. And then, you have cash, 30,000. So you will have some explanations right here. Purchase of office equipment for cash. So meaning there will be no down payments, there will be no on account because the office equipment was purchased 100% for cash. So that's it, office equipment. And then we have utilities expense. So let's put that right here. I'm going to have an asterisk for expenses. We have utilities expense. So utilities expense, we have 19,750. And then since it has been paid for using cash, we have here 19,750.00. That's payment for utilities. So it's clear. So we have letter G finished already. And we have letter H. You have received 80,000, which is why there is an unearned revenue right here. Because if you remember the transaction here, there are customers who have paid in advance. Okay? So debit cash. No. Debit cash. So that's 80,000. And the explanation for that one is advance payment from customers. Could be like that. And then, we have to credit unearned revenue. So, let's put right here, unearned revenue. So, unearned revenue is 80,000 also. And because of that, letter H is already finished. And we have letter I. There is a debit cash of 40,000 and then credit service revenue. So you have to put there 40,000 as debit. You have to put here cash received from customers for services rendered. That's it. Okay? And we're through with letter I. And we have letter J. So, the debit is baby G withdrawals and then credit cash 25,000. So, we have to put here another T account because that is a new account title, baby G withdrawals. Yeah. Baby G withdrawals 25,000. And then credit cash 25,000. And you put right here the description, owners, drawings for personal use. Just like that. So that's it for step 4. However, the last thing that you should do in order to finish really the step 3, step 4, step 3, the posting of journal entries to the ledger is to get their balances. And we'll start with cash first. So as you can see, the cash has 100,000 debits. So let's total the debits first, plus 80,000, plus 4,000, and we have 184,000. So debits is 184,000. So cash inflows is 184,000 or cash increases. And we have credits 23 plus 15,000 plus 10,000 plus 30,000 plus 19,750 plus 25,000 Oh no, 25,000, we have 102,050. So it's normal that the debits are higher than the credits. Okay? If the business is still starting, just like our comprehensive problem. But if it is already older, the company is already for 2 years, 3 years, there are years that the cash inflows are lower than the cash outflows. Okay? However, as to the cash balance, it will still be debit. Okay? Because maybe even if the cash inflows for the year is lesser than the cash outflows, there are already cash that was earned by the company last year's. Okay? There will never be an instance that the cash balance will be negative or the cash balance has a credit balance. It is because uh, how can you finance all these outflows without these inflows, if ever, right? So if you can see in your work that your cash has a credit balance, think twice because maybe you got it wrong. Okay? But there are times also that it is really negative. It is because you have given a lot of checks to your customers even without uh, the proper amounts or without the sufficient balance in the bank. So it could be something like that. It's called an overdraft. Okay? However, mostly, if you have a negative cash balance, then there is a big possibility that you got the recording wrong. Okay? So, again, we have 184,000 as debits and 1050 as credits, which is typical. So 102,050 minus 184,000, we have 81,950. So the balance of cash is 81,950. You have to double rule it, and I guess I have to put that on a square. So that's debits, and we have prepaid rent. It's still 15,000 because again, this is the unadjusted balance. And we have supplies, 20,000. And we have the office equipment, 30,000. And we have the BBG withdrawals, 25,000. And we have the regulatory expenses. So let's erase it here. So we have 2,300. That is the balance of the regulatory expenses. And we have the utilities expense, 19,750. That's it for the debits. And as you can see, if you notice, I have separated the debits and the credits. It is because I wanted to make sure that before going to the step 4, the debits balances, everything in the debits, will equal to the balances of the credits. So we have 81,950 plus 15,000 plus 20,000 plus 30,000 plus 25,000 plus 2,300 plus 19,750, and you will have a balance of all the debits, 194,000. How about the credits? So the credits is just, let's encircle that immediately because there are only one entries. There are only one entry per account title. So we have, I don't know, why is this not balanced? Did we skip something? So regulatory expenses, right? Did we forget something? So we have credits right here, unearned revenues. No. Service revenues. Yeah, I guess we did skip something. We did skip the service revenues because that is on the credit actually. Service revenues. I have not posted the service revenues. We have cash, 40,000 cash received from the customers. But service revenues, we did not put it here. So you have to be very careful. So that's what will happen if ever. So you have 40,000 and we have unearned revenue, and then we have accounts payable of 10,000, and then I guess there's nothing else, right? We have BBG capital, accounts payable, we have unearned revenue, and then we have unearned service revenue. So what happened basically? Okay, so if we total, we have 100,000 plus 10,000 plus 80,000 plus 40,000. We have 230,000. So what did we skip? So let's check on everything. We have cash 100,000 and then BBG capital 100,000. That's balanced. We have regulatory expenses 23 and we have cash also 23 as in the credit. So that's balanced. We have prepaid rent 15,000. Yeah, we have. And then we have cash 15,000 as credit. Okay. We have supplies 20,000. That's debit. And then we have cash 10,000. Yeah, we have cash 10,000 right here, down payment for purchase of supplies. And we have accounts payable of 10,000. And then we have office equipment, 30,000. And then we have cash, 30,000 also. And then we have utilities expense, 19,750. And we have cash, 19,750 for credits. And then we have cash, 80,000. And then we have unearned revenues, 80,000. And then we have cash, 40,000. And then we have service revenue, 40,000, which we put it right here. And we have BBG withdrawals. We have 25,000 right there. And we have credits for cash right there. Okay, so everything was already in. So we might have committed a wrong here. So we have, again, 100, yeah, 100 plus 80 plus 40 is not 184. 100,000 plus 80 plus 40, you have 220. You have 220. So basically, 220 plus minus actually it's minus 102,050. Yep. We have 117,950. So let's add again 117,950 plus 15,000 plus 20,000 plus 30,000 plus 25,000 plus 19,750. Yes. Plus 23. And we have 230,000 actually. So 230,000. And that's it for step 3. The posting of the journal entries to the ledger. But then again, before we end, here is the formal version of the general ledger, in which it is just 80 accounts still. There is still a middle cut, just like this one. But it is not so much, what do you call this, emphasized. However, there are columns like there is a date and there is an explanation which should match the explanation of your journal. And if possible, you could put there which page of the journal entries are you referring to, because sometimes this journal entries appears in the form of a book. So there are pages, okay? So if this 100,000 is on the page 1 of the journal, so basically, because that's the first transaction, then you have to put there the entry for this 100,000 and the entry for this 100,000 in the BBG Capital is located in the page 1 of the general journal book. Okay? So that the users of information, or the ones who will see the books, they will be able to trace it. Okay? For matching. Okay? So that's what we call as referencing. So again, the formal general ledger is just like this. It's just a big T account with dates, with descriptions, and of course with amounts. And there are a lot of columns because each of the digit has a particular column. So that's it for this video for step 3, posting of the journal entries to the ledger. And remember, even if we have a wrong, we committed a wrong earlier, that just means you have to be very careful in this step. Okay? So let me repeat. The journal entries and the adjusting journal entries, as well as the identification of transactions, are the most difficult steps in the accounting cycle because you need to analyze. Okay? On the next steps, like this step 3, this is just procedural in nature, but you have to be careful. So that's it for this video. See you on my next one, which is the step 4 and step 5 of the accounting cycle.